Dodgy will probably moan if I don't. Okay. So today, I don't know what we want to do. Obviously, we can take the AM session. Obviously, it's lower probability conditions. It's a bank holiday. I would 100% not recommend trading. I would never recommend trading a bank holiday. Personally, on my trading rules, I do not trade bank holidays. We could take these some AM session for 9:30 open, and then see how price action is, and then we can do some back testing or something if you like. So we can go top down. Let's just use this chart. Good morning, good morning. Good morning, Cactus. Good morning, Jeffrey. Yeah. So let's do as it's a new week, we'll start from higher time frames. You had lunch. Okay. No, I haven't had lunch yet. So the previous weekly candle, you can see we expanded into this wick. Okay. We expanded into this wick here, closed above consequent encroachment, so that's still not showing a clear, defined expansion out of this range. We're still in this higher time frame dealing range. Last week we had an immediate rebalance here, and then traded lower. So that's, you see how this candle and this candle overlap. There's no inefficiency created, and then we close lower. On the daily chart, we've traded up here, this daily inefficiency, taking buy side, and then displaced down towards the sell side of the range. Returned back to equilibrium last week. And then Thursday and Friday we traded lower, down to the lower quadrant of that range. So higher time frame bias rise, as is a bank holiday, I haven't got much. Again, haven't got high expectations for today as all for a direction. We could just stay in the range of Friday's daily candle. We have created a daily fair value gap above market price, and then we have a daily swing low. My main interest is if we expand lower is these relative equal lows now from November, and then beginning of February, 2 weeks ago. So that's kind of what I'm looking at on a daily. Let's go down time frames like this. If bearish in here, this 12-hour inefficiency should hold price, and then that's paired with that daily fair value gap, which is that should support price lower into sell side. These up close candles should get traded under and used as a bearish order block to continue lower. Again, we had the expansion last week, and now we're just confined to a range. Once again, trading into this 4-hour fair value gap here, respecting midpoint, and then within here. So these are technically the two conditions: 4-hour fair value gap, 4-hour fair value gap. So we've got a bearish condition. If we're bearish, we're going to trade under this fair value gap and respect the higher, and bullish condition is trade over this 4-hour fair value gap. So give me one moment. Friday we traded into this hourly fair value gap beneath this swing low, and then returned back into the range, into this hourly inefficiency. So we went from a level of inefficiency to a discount inefficiency to a premium inefficiency. 660 or 660. So that means full pot short to Johnny's target. There. It might be different on micros. The reason I'm on micros here is if we look at a 1 minute chart, for example, if I go on to NASDAQ, you can see how the volatility is a lot less in terms of printing candles. So I'm just opting to use micros because it's a better viewing experience as a whole, especially in low volatility like today. So that's the hourly chart. Again, for two conditions, we're confined to this dealing range now in a lower time frame. So we'll see how we trade beneath old highs and old lows. Right now, my interest is obviously this low here, and then beyond, there's relative equal lows beneath here. So all the sell side from Friday. I'm just going to draw this out. Yeah. Today, again, it's something like on bank holidays, we may get some really nice A+ setups. It's not out of the blue to get them, but you're playing with probabilities, and I would rather not be trading on lower probable days. So that's just me. You obviously all have your own rules, but some days it's just best not to trade, especially when we're going to have lower volatility, when we don't have a really clear draw as of right now, where we're inside a previous range. So for me, it's better to sit out. But not when the stock market is closed, right? I'm not trading today as a whole, personally. I may take something on paper just for proof of execution, or just take reads. But the stock market closes out at 1:15 today, so the market will still theoretically be open till then, but it's still a bank holiday. That doesn't change the point of that. So I learned originally from Dodgy, so with inversions. Let me clear this. Personally, my entry criteria is different to Dodgy now, but I will try and stick to... What? Okay. Because I'm not American. Personally, my entry criteria is different, what I take to get into a trade. However, draw and liquidity will be exactly the same. So instead of inversions, I just use order blocks. That's really the only discrepancy there. What does that mean? It was not me that. It was not me. I did 8 London sessions. Well, you don't have to be in here if you don't want to. It's up to you. I really don't mind. I don't get anything out of being in here, so. When you enter on order books, do you enter on the body of a wick? For an order book to be validated, I want to close under the body. But I will enter, for example, let's get an example up here. For example here, right, we closed under this up close candle. I know it's not a single up close candle, but I'm going to use that as an example. We closed under the body there. At that point, that is a valid entry for me in terms of if my narrative and everything was in place. Once we close under the body, there's a potential entry. But yeah, and I can use the low of the candle as a potential re-entry. It is being recorded. Yeah, exactly, Jordan. So obviously we can see us expand into that sell side. And that low. I will. Well, I understand you of whatever. I can't change my accent, so I'll just time you out if you like. I could, yeah, I'll just time you out if you continue, but I appreciate the feedback, but I can't do much about my accent. Okay, so let's see. So we've got the current new week opening gap. So I don't know if does Dodgy use new week opening gaps? That's I'm gonna try and keep it as simple as possible on my charts because normally I'm in coffee and chill. In the mornings, so some people may have seen me in there before. So a new week. So for example, the new week opening gap here is a target as it's paired with an old sell side level. So if you have an inefficiency, so that can be in form of a fair value gap, a volume imbalance, a new week opening gap, a regular trading hours gap, a first percent fair value gap, so on. If that's paired with an old low, it's more high probability that will expand into that while taking the low. So again, usually I wait till 9:30. I can't really give. That is my bias right now. I would want to see how we react at this sell side and this new week opening gap. I personally don't trade YM. Let me just get this up. I am watching all indices within my chart layouts. So that won't be on this main screen, but as you can see that. Good job, Johnny. Yeah, a new week opening gap is an imbalance in price. So when we're above it, obviously you want to see it used as support if we're bullish. When we're bearish, you want to see us closed under it and use it as resistance. Same way as a fair value gap or inversion. You can see the new week opening gap engaged there. These do look a bit suspicious, but what am I long from that 4 hour fair value gap? Are you referring to this 4 hour fair value gap? So this 4 hour fair value gap, I don't really want to be used as a bullish fair value gap. I would rather that be used as an inversion fair value gap. The main reason on that, because you have to look at higher time frame order flow, right? If you look on the daily, what are we currently doing? We've ran higher in here. If we were going to go to all-time highs at this time, within this price run, we would have done it then. Like, there's no reason that if we were going to all-time highs, we wouldn't come down this far into a discount, leaving this sell side intact. So if these lows are the draw, any bullish inefficiency on a lower time frame that is getting created in a retracement, you would want to see used as a support originally. For example, here, you would want to see us use it as support originally, trade away into some sort of premium of this range, and then see it closed under and used as resistance. as an inversion fair value gap into sell side. Well, I'm timing you out. So you want to always trade on lower time frames in line with your higher time frame bias. If you're bearish on a daily chart, you don't want to be trying to longer term plays, I guess, based on a lower time frame. Because if we're bearish on the daily, any retracement or any up close candles which we create are going to be a return into a short term premium. For example, in here, we use this inefficiency in here, and that's a potential nice long up until a premium of the range we just created to this 4 hour fair value gap. So we're basically using it as stepping stones on our way down. Having inefficiency, trade into it. You can see the bodies respecting it. We then sweep the candle low here. And then Friday we return up into that 4 hour inefficiency and a 1 hour inefficiency. Albeit with not very nice price action. So what I put the most emphasis before, like, I will say this at some point in here in this stream, I will say when bearish, every up close candle will support price lower. That's basically I'm referring to every single, for example, this price any low resistance price delivery, so any delivery which we are getting speed, every single up close candle which we create will support price lower. So that'll be used as bullish order blocks. Same with fair value gaps. Notice every single up close candle which we trade through gets used as a bullish order block until order flow has changed back to bullish, or back to a short-term retracement phase anyway. I'm not personally going to take any trades on my funded or live account. I'm waiting till let's get first fetch it. I'm waiting till Thursday. Not Thursday, Wednesday, as we should have a higher volatility coming in then. And then we got unemployment claims, I believe, on Thursday, and there's some high impact news on Friday as well. Just because we haven't got any news, it's just a personal preference of mine. Obviously, you can still trade it. It's going to be more high probability than today. We've got medium impact news at 8:30. But I just opt to trade it. I only like to trade for high probability when we get volatility injections. That doesn't mean if I see a plus setup according to my model, I won't take it at lower size, but I won't be trading my live account in it. Have you seen Jeffrey around? Yeah, I do trade full time. He's in Tel Aviv. Yeah, so you want to be trading around high impact and basically high impact news events. I know most people don't like to trade high impact news events on the dot, and you shouldn't. I don't trade like 8:30 news at 8:30. I'll wait till 9:30. But days with them higher volatility, we're most likely to get a expansion profile towards our higher time frame draw on liquidity. In terms of any, for example, today, we have higher time frame draw on liquidity. For example, like the sell side beneath here on the daily chart. But you can't expect that to be engaged on a bank holiday. Like, I'm not expecting it to trade down into that. If we do, we do, right? But I just won't be a participant. I'm not fearing missing that move, because I've seen bank holidays do nothing in the past and absolutely destroy everyone's capital. So you might say so. Consider equal lows. Equal lows is a form of sell side. Beneath any swing low, there is sell side liquidity. I personally don't put as much emphasis on equal lows as Dodgy in terms of doing exact equal, but in terms of any obvious and prominent swing high or swing low, that's sell side for me. So, for example, beneath this run lower here, right, you can see how we run into these highs in here. So these are potentially low resistance highs. You will see it on a 1 minute. We run above them, then we get the inversion, and then start spooling towards sell side delivery. So this high is a potential protected swing high because you can see we took out previous swing highs. I don't know if there's going to be a higher time frame. It was created in a 30-minute fair value gap there. So, and then we displace lower back into this range, return to the high of a fair value gap while sweeping buy side, and then we start spooling down to sell side liquidity. I am recording. I'm recording it, so it's fine. So the only way I become bullish in here, like, or in terms of my entry criteria for any higher prices into the premium of this range, I need to see some sort of 5-minute down close candle traded above. So personally, I would like to see an up close candle form on a 5-minute chart. Then we get a new swing low created, creating a 5-minute down close candle, and then that 5-minute candle closed above. So for example, try and find a decent example. I want to use this, but it's really messy price action. But where we have a series of, we have an accumulation, then we get a series of down close candles taking sell side liquidity, and then we close above it. That's the only way we're getting a change in order flow for me. So until we're showing that, any premium array in this price leg should act as resistance to continue coming to sell side. Hello, Dodgy. Yes. Oh, I hear you. I hear you. Yep. Yeah, same. It's not looking bullish at all in here. There you go. This one. Yeah, the daily is very weak in here now, in my opinion. I just haven't got high expectations for bank holiday. I've timed him out. Yeah, it's fine. Yeah, I can. He just didn't like my accent. So the hourly Dodgy's referring to is this fair value gap here from Friday the 6th of February. So that fair value gap in there between that high and that low. It's also the 4-hour close, yeah. I don't get paid at all in here. If I was, I wouldn't be in Coffee and Chill. It is being recorded. So Let me just mark this out correctly, because I'm pretty picky with my. Below, let's do kind of below. So obviously sell side is still a target while we are bearish. So you can see us on the 1 minute chart. You can see how we consolidate within that new week opening gap once purging that sell side. You can see how the premium levels are supporting price lower continuously. So the high in here, we're wicking up higher, trading lower, close beneath consequent encroachment in here, use consequent encroachment, one last tap for good luck, and then we trade to a new measure of sell side under this short term low. Basically every PD array from ICT, so every fair value gap, everything, every wick, every new wick opening gap, I put quadrants on. It's just to measure strength and weakness within a range and premium and discount sensitivity within that PD array. Dodgy's not trading today because it's a bank holiday, so. I'll probably just be tape reading for the most part. I might take a paper trade if anything, but we'll see. So buy side, short-term buy side are above these highs, short-term sell side are beneath these lows here. And obviously if we get through them lows, then I would want to see how we trade through that range and into sell side. I think we're bearish, 100% we're bearish overall. On the daily chart, I'm bearish. On every time frame, I'm basically bearish. Do I think we're going to dump today? Who knows? It's a bank holiday. And none of this is financial advice. Motherfucker, don't sue me. We got 1 minute to open. Again, as usual, we are bearish until proven otherwise. And I know I'm charting on MNQ right now. Again, if people just join, the reason for that is, especially here, MNQ has more volatility overall. If we get some sort of, for example, you see all this price action with the volume balances compared to MNQ. It's just better for a bank holiday, in my opinion. But I will have a look at Nasdaq E-minis for any closes on certain candles. So ES has its sell side, respective sell side. So if we, when do we got it open as now? So ES has sell side. That's not ES, nearly. ES is sell side under this short term low here. Are they equal lows? Yes. So ES has equal lows on the hourly. There. What standard divs? No, I don't. With standard divs, I don't use it as top and bottom ticking. Personally, but I know the obviously 2 to 2.5 retracement in terms of the manipulation leg if you chart that out, but I personally don't use that. Again, after 9:30, so you can see the 9:30 candle, it does nothing. This is characteristic for a bank holiday. There's no volatility. I've been trading 3 years and a couple of months. profitable for about 1 year and 8 months. Personally, if it's your first funded account, if you're able to request a payout, take the payout. Like, you need to feel how it is to make something from trading in terms of feeling something getting back. You shouldn't be trying to make home runs instantly with payouts. Go for base hits at the start. And then, obviously, once you get a couple of payouts, you can build a buffer and try and get some bigger. You should build a buffer in the account in terms of if it's a 50k. You should obviously build a buffer before you withdraw, because then you're less likely to blow it after the fact, after you get that withdrawal. Dodgy isn't trading today because it's a bank holiday. My usual risk to reward, what I aim for is between 1 to 1 risk to reward and 1 to 2 risk to reward. I'll bring a whole spiel on about risk to reward. But that doesn't mean I'm not taking, like, people at in Coffee and Chill, I'm on a 5-second chart refining my entry. And then that risk to reward is a lot higher than, for example, if I'm trading on a 1 minute towards a draw. But I don't aim for high risk to reward. I think lower risk to reward is better for most people. In terms of psychology, in terms of most strategies, and most models. So see how we use this new week opening gap and in here. So we came up to the high of it. See, if we get through it, then you would, if bullish, you want to see it used as support. If bearish, what you want to see is us continue trading lower from it. So included in premium, you get you get obviously Dodgy's live stream every day. He live streams every day. Obviously he's not in today because it's a bank holiday. That's why it's free access to everyone. You get educational content on his whip, is it? And then you get obviously daily commentary. Okay. Jacko? So a small stop for good psychology, because you only risk like 100 euros to 1,000 euros, sometimes 500, right? Okay, that means you have to you win 1 trade every 10, right? In your example, so you're going for 10R. Think how many losing trades you are taking before that. You potentially could take you will take 9 losing trades before 1 winning trade. Think of your psychology during that time. Humans don't like to lose as a whole. And I know people will say, oh, it's okay to lose, like it's just part of a plan. But once you start losing and you're losing real money, you're going to start trying to make that money more, right? And it's just going to mess up with your psychology as a whole if you're having 9 losing trades before 1 winning trade. Some people can do it and that's okay, but for the majority of people, that's not the optimum way to go about it. These wicks are nasty, yeah. Gonna be a touch. Top of the hourly gap in the 600s. What here? What, the hourly? The left side of the curve. 7:15. Yeah, I'm looking at 7:20. So you can see how we're wicking higher into this new week opening gap, currently finding that as a premium array. So I may do back testing like maybe at like 10:30 Eastern Standard Time after that time. But most people like to see live price action, even if it is on a bank holiday, with no inefficiencies being created. Is screen time forward testing the only solution to gain confidence and training the model in the real market? Personally, yes. I feel like screen time is one of the biggest aspects which most people should gain. Like, within the first year of me trading, I didn't spend a single minute on a live account or evaluation or funded account. I was just trading demo and tape reading. And I feel like most people should do that and just look at what the market's doing instead of just trying to make the money associated with calling the market. Like, I feel like it benefits everyone so much just watching price action without forcing trades, because once you see price deliver over and over again, all you need is a model. Like, I didn't copy my model off anyone, really. I started trading Dodgy's model back in 2023 when I started trading. That's kind of my introduction. But I kind of branched off from that and focused more on the ICT aspect. I've got FX replay. I personally have never backtested in the past in terms of using a platform like FX replay. But obviously it's pretty easy to use in here. New day and new week opening gaps. Let me just switch over to ES here quickly. Sorry, just cut my sentence off. So you can now see how ES has traded down into its equal lows in there. Remove that sell side. Let me. So personally, if we get a liquidity sweep like this and we get an inversion, in my personal experience, that's not what I like to look for in terms of the first inversion after a sweep of liquidity, right? I need to see some sort of higher time frame, higher than the 1 minute PD arrays violated in order to enter a trade idea. Especially with a bearish bias, right? Because the only way in terms of getting into a move would be for bearish price action is something like get an internal raid and then obviously get the inversion within that leg. See sell side. Do more explanation. In terms of what? What do you want me to explain? So with new day, let's go back to new day, new week opening gaps. For example, in here, price will gravitate towards new week opening gaps and new day opening gaps because it is an imbalance or an inefficiency in price. So during that period of time, you can see there is an absence of buying and selling in terms of when that candle opens. That's the difference between the closing and opening, between the close on Friday and the opening on Sunday. So there was an absence. So we'll use these for the 20-day look back period in advance. So you see how we gravitate once we sweat buy side in here and displaced. Notice how we keep gravitating towards that sell side and the new week opening gap. When new week opening gap is paired with an inefficiency, you want to see how we trade into that new week opening gap and if we displace higher. When we see this, where we instantly trade under the midpoint of that inefficiency, we're likely to see this new week opening gap to be traded as a inversion aspect in terms of once we're beneath it, you want to see it used as an inversion, right? So you want to see it used as a resistance to go lower. So you can see we consolidate in it. Trade to consequent encroachment one more time, displace lower. Once we create this low and close outside of a gap, we use the lower quadrant, failing to close inside of a new week opening gap, and then continue trading the lower in here. The highest time frame inversion I would take, I wouldn't personally take more than a 5 minute, but I narrow down my entries onto lower time frames. That doesn't mean I'm not using higher time frame inversions as a bias or a confluence to a certain draw on liquidity. But I like to narrow down onto lower time frames. Yeah, I do. Okay, we're not. The one I'm using is by Faddy. Like, this is what I'm kind of looking at on all my screens, obviously. I don't, like, intraday I'm looking at all the time frames. You got regular trading hours gaps. And then that's execution. And then, where's my overture? And then on here, I've ignore that. That's basically the higher time frame PD arrays and all the regular trading hours gaps onto a lower time frame. So just monitoring how we use each quadrant. But we'll take that off the screen. So there's sell side engaged. Notice since we traded to the lower quadrant of a new week opening gap, you can see how every up close candle supports price higher. Again, I said I was going to say this because this is literally the easiest way to read order flow. Is when bearish, every single up close candle which we close beneath will support price lower. Because the bodies hold most of the volume within a candle. The wicks are doing the damage. So the sensitive part of every single order block or every single PD array is technically the opening to the low when bearish. Or no, in all cases, sorry. So for bearish order blocks, it will be the wick here. But then it's permissible for us to trade to the mean threshold of order blocks. So like any PD array, like a fair value gap, you rather not see us close into or beneath consequent encroachment of a fair value gap, because you want to see discount. For example, if we're bullish, let's use an example. There was a good what was the example I was looking at? Could use this, I guess. So for example, this fair value gap here, right? Notice how we're not trading to consequent encroachment. But most sensitivity is going to be within the upper portion of that range, because when bullish, you want to see gaps left open. You want to see inefficiencies remaining open in the lower half, because it's showing discount sensitivity in the higher portion of a bullish fair value gap, for in this case, right? So we trade up down into it and displace away. That's showing discount sensitivity within that range. For example, in here, you can see how we're not closing above midpoint. We're leaving the bodies out of the upper portion of it. So if you turn wicks off, for example, you can see us failing to get into the upper portion of it and then trading lower. So that's showing weakness. Yeah, I would, like I mentioned before, between these lows and here, I'm monitoring how we trade through that range and if we get speed through that desired direction. Again, I'm bearish bias overall. It just doesn't give me an entry model to get into, especially it's a bank holiday. So I don't think our sell side targets will be delivered today for the entire week, because I don't think we're moving 400 points on a bank holiday. So tomorrow and Wednesday, that is a potential target. Personally, I don't use rejection blocks in terms of what most people use them to enter on. I just use wicks. Hourly wick inversion. A wick inversion is just when we close under a wick, for example. Like, I see quadrants every single wick. So, for example, monitor how price delivers within the wick, and we use that as premium targets. About the indicator, I see high time for value experts have. Yeah. Fair value gaps will be used for a long time after they're created, but you should only have the relevant fair value gaps on your screen. What hourly wick are we referring to? This one. This one. Give it time. Real fish ASMR. Oh no. So ES is within its new week opening gap now. I'm just using this. See. So we have SMT at these lows. That doesn't really affect much because I have a bullish one. Okay, one sec. That doesn't affect much for me if we are bearish. However, that could be a sense of a retracement for Nasdaq. And if ES wants to use the new week opening gap as a premium array, it can allow a short-term retracement on, or a discount array, sorry. It could lead to a short-term retracement on Nasdaq. Obviously, the inversion here, again, it's like catching a falling knife. I'm not bullish, so a bullish one. Sorry, let me. Oh, this wick you're referring to? Yeah. Just mark it out. Technically, we've already traded above a internal high in there. Use wicks and inefficiencies as inefficiencies, yes. Wicks are inefficiencies. What if we close above it? Will it reverse or just... Like, this fair value gap here, obviously we didn't close above it before that internal high. So we took the internal high before that fair value gap. This fair value gap here, personally, I'm seeing how we respond back up into this 2 minute up close candle, but that's personally what I'm looking at. Isn't the fair value gap on the hourly a very good support since previous candle hasn't got below halfway point? Potentially, yes. Because obviously we feel that entire range of that gap, right? So we've had buy side and sell side through that entire delivery. So now we don't need to return down into 50% of that fair value gap again, because we've delivered price there. If we were bullish and we're going to use it as a discount array, we will not trade down beneath 50% of this, right? We'll use the upper portion and then use that as support to continue a higher delivery. Yeah, that's a good question. So we've closed above that in efficiency again. Didn't close above the 2 minute. This is recorded. I don't know where it's gonna go yet. Okay, if we're gonna go to that, basically what I'm looking at is any single inefficiency created on this leg. So I do have a 10-minute chart, right? But like any inefficiency created in, or any premium array created in this leg lower, that's where I'm looking to see if we use it as a premium array or we trade through it and use it as a discount array. Obviously in here on lower time frames, you can see we've had a short-term retracement here from this low to this high where we're currently at. We are starting to see bullish order flow. Does that mean we're going to get a straight up reversal? Maybe, maybe not, right? I'm not going to take a long down here, especially when it's not even really A+. Like in hindsight, if this works out and goes above these highs, for example, in hindsight you can say, okay, that's really nice. But given the conditions, right, I'm just not looking to. I've always had trust issues if we have an OB followed by an inversion. Do you have an idea? An OB followed by... A minute by now. Okay. So for example here, right? So in terms of that, if that was going to support us lower, I would want to see sensitivity in terms of a lower portion. So if we look, just size up midpoint, for example, there. Let me just get rid of that fairly gap. That's the order block and the mean threshold. Notice how we instantly trade straight above it and above that inefficiency. If we were wanting to be using that as a bearish order block, for example, in that 2 minute, you would want to see us wick higher and close lower. You don't want to see bodies closing above 50% of that range. So there would be, for any long here, that would be break even, or this high potentially could have been break even. But again, that's... Like in hindsight, this is going to be a pretty clean V-shaped reversal, right? We've had that 4 minute inversion. We've had the 3 minute inversion. Technically, it's a really small fair value gap. It's not obvious. There's a 2 minute fair value gap we got inversed. The 1 minute fair value gap inversed, and then that would be your break even, right? Or one of these internal highs. So, like, I know people usually stay on the 1, 5, 15 minute chart. I'm looking at all of the... I'm looking at all of the time frames for inefficiency in price because we want to be trading with imbalance. Like again, like I mentioned down here, this will look like a clean setup in hindsight. In hindsight, it will look like a very nice delivery from this low to wherever this price run stops. Like I mentioned, you can see how ES is finding using the new week opening gap as discount sensitivity and then trading back into a range, and that allows NQ to have this retracement. So now I'd want to see how NQ trades back into this new week opening gap. This one, Johnny. Do that. Again, I didn't call out along here. You can visibly see order flow switching. Like, I was going to start saying opposing candles, like most people. Anyone from Coffee and Chill in here, usually comes to Coffee and Chill, like, that's opposing candles, start supporting price higher. And then when bullish, every single down close candle which gets created should support price higher. So you can use that on, for example, lower time frames. Let's go on a 15-second chart, right? Since that low was created, from that low, so let's just look at that low to new week opening gap low, right? Notice how every single down close candle which gets traded through since that low was created supports price higher. I'm not going to encapsulate that because I'm just going to mark out lines because it's quicker. No down close candle there, created there. Up until that new week opening gap, right? So once order flow switches to bullish price action in a low resistance quick delivery in price, every single, when bullish, down close candle will support price higher. When bearish, every up close candle which gets created and closed beneath will support price lower. Study this price run from the lower quadrant of a new week opening gap to this sell side. Right? Opposing candles. I didn't close beneath them. Close beneath them there. Close beneath them there. Up close candles. Closed that below. Immediate rebalance, just place lower to sell side, and then you can do that intra range, for example here, a small fair value gap, and then within these price runs, for example here, again, every single up close candle which support is closed beneath will support price lower in a price run, right? So think if that's a 1 minute chart, right, and we had a 5 minute inefficiency here. And sell side under here. Notice how every single up close candle supports price lower. Constantly. That's how you monitor order flow. And that's the easiest way to look at how price is delivering. "15 seconds. So obviously with that, what I just explained, it comes with pattern recognition in terms of understanding when low resistance runs happen. But so I'll get 2 examples as a thing from last week. Let's go into the journal. So for example, if we're bullish here, you would want to see how we respond in this fair value gap. Any fair value gap beneath this range, if bullish, you want to see left as a breakaway gap. No blinds. So that was on Friday. Opposing candles. Selling short in opposing candles to sell side. So once we get that change in state, every opposing candle supports price lower. Notice this run higher, every up close candle supports price higher. And you can see the upper portion, again, staying above consequent encroachment like we mentioned earlier. You want to see that for strength. What pops is today trading day counted by itself, or is it including Tuesday's day? Pretty good question. Pretty sure it's a separate day. So in here, I personally wouldn't take an entry. Again, I'm not bullish bias. We're trading now into this 15-minute inefficiency. Right? So in terms of this range, So this 15-minute inefficiency, in terms of this range from high to low, we have created a swing low and traded into a premium per range. And that is the model which, even when bearish, that will play out because we have to trade into a short-term premium of a range. So paired with an SMT at the lows with ES, and ES respecting the midpoint or trading into the midpoint, failing to get beneath the lower quadrant of the new week opening gap, that allows NQ to have this run higher into its current new week opening gap. So you see how we trade to the high of the new week opening gap? So how would you take an entry here? Yeah, personally I wouldn't, as of right now. What we would have to see is either something like that and a potential inversion or opposing candles, or us to get above that 15-minute, wait for some entry model in here, opposing candles, and then trade up into relative equal highs. So once we close above, or if we close above this new week opening gap, you want to see it used as support to continue higher. Give us signals. Hello, Steve. Here's the uncle. So in a half hour or so, we'll see how price action is by then, but we can do some back testing at some point. This YM. What did you take on YM? 5-minute? So if we look at all the assets, you can see YM is the strongest asset of all of them, so longs on YM would be favourable. If we look at the lows, and then obviously there's S&T there. Send that stack. Oh yeah. You didn't mess up. Good job. You're going to be like transport, please. Yeah, well, you would. That's 5-minute inefficiency. I'm going to keep my chart up a bit in here. That's the old sell side. So all old sell side levels you want to keep on your chart. All sell side levels, previous sell side which we swept, you want to use on your keep on your chart, because technically, if bearish, the range above is a balanced price range. That's your breaker formation where we have a high, low, higher high, lower low, return into it. So now we closed above new week opening gap. I would want to see if we use the new week opening gap as discounts sensitivity. So also we find discount sensitivity within the upper portion of that fair value gap. But again, we're trading into this 5-minute fair value gap now, and this 15-minute. So you want to use previous sell side as potential rejection? Yeah, because it's a breaker, right? So if you know breakers from like which ICT teachers, right? It's just essentially a high, a low, a higher high, a lower low, right? So paired with this inefficiency as well. And then we can see what happens there. Personally, I'm not trading today. It's a bank holiday. My model occurs in here and in here. In this sell side and buy side of the curve, my model, I'll show you what my trading plan is just because it'll give a better visual representation. I'm not going to give my whole document, but in terms of any down close candle in a buy side of the curve of a market maker model, that's my entry. Stop beneath the down close candles. Bearish example is a premium array traded to create up close candles in the leg lower in the sell side of the curve. Entry on that, stop above. Target there to equal those. I'm bearish today as well. In terms of what would invalidate a higher time frame bias, is the daily fair value gap. I know that's a long way away from where current price is, but on the daily I'm bearish, so my highest risk positions are going to be short. Unless we do something like this on the daily chart and close above this short-term high, then that just means we're still in this consolidation that we've been in for the last 3 months. Tea and chill. Last night when I got home. What time frame do I execute? Most of my entries are based on a 15-second or 5-second. But I would recommend at least a 1 minute. Yeah, I'm not going to get the 5-second chart up. Like, I'll show an example, right? Just from this swing low, which we created, even on a 5-second chart, monitor every single down close candle. That's really consolidating. Yeah, I'll do it. Okay, let's go. What's that? Venmo, dodgy. He needs money. Ryan's 27 psych. Up high. Hey, mate. What is it? W? Oh yeah. I mentioned it. I said I'm not trading. I mentioned the inversions, but What's your textbook inversion, would you say? What one are you looking at? Yeah, it's V shape. But the where you running? Or how far? I'm doing a marathon in 2 weeks. And white girl music. It's just yeah. Like Dodgy doesn't just turn on his model for the New York AM session and turns it off. Like so you can see this old sell side level which I mentioned to keep marked out because that's in terms of a breaker. You can see how the bodies failed to close into it. And then we trade back beneath the new week opening gap, find premium sensitivity and consequent encroachment, leave the upper gap up here a breakaway gap. So we failed to trade up into that. If we're bearish in here, that preferably should stay a breakaway gap. What do you mean copy him over? That. Just hold control and drag. So in a sell side of the curve, if we are coming down into this low, you want up close candles to support price lower. We're trading into these multiple 5-minute fair value gaps. So we'll see. So we trade into the premium, into this breaker, into the fair value gap. Yeah, it's what he just put in chat. Is 10-minute your favorite time frame? So in here, again, the conditions are these inefficiencies, for example, in a 5 minute or the 7 minute fair value gap. That basically encapsulates both of the 5 minute fair value gaps. So see how we react out of that. I'm bearish biased, so that doesn't mean we're going to go lower than right now. But overall, on the daily chart, I'm bearish biased. But I'm not expecting them daily draws to be met today on a bank holiday. I do post the backtesting. So the backtesting streams, I've got them both recorded. If you want them, just DM me. I don't think Dodgy's uploaded it to the premium stream folder. Just DM me, and then I can send them over. I just need to upload them. So again, monitoring. Monitoring up close candles when we're going lower. And then obviously there's minus sell side under this low. So I might upload on YouTube. I just don't know in terms of what's it called. Some of like, for which I like the Sunday class, for example, that's premium only, I'm pretty sure, in terms of watch back. So now I'd want to see if we use these CVs up close candles. I'd want to see if we find sensitivity within that range. So you can see how we left a breakaway gap up here. Some big writing. So that's the breakaway gap I mentioned when Dodgy just left for call. In there we get an immediate rebalance. This I marked out myself, but by Faddy. It's this indicator, if you can find it. Take a screenshot. So now you want to see we've traded to midpoint of this 5 minute fair value gap. We've just created a new 5 minute candle. So what you want to see, preferably this 5 minute fair value gap, if we're bearish up here, this 5 minute fair value gap should remain open. So if we are bearish in here, let me clear this chart up. So that should be a breakaway gap. If we're bearish, using price delivery continuum. Tidy all of this up. What is that black line? It's not going away. So again, I'm anticipating any up close candle which forming if we're bearish. So a breakaway gap is basically a fair value gap which will not fill in. There's multiple ways a breakaway gap will form. It's usually during like a V-shape recovery, for example, a V-shape. A V-shape, I guess, like run like this for you see a V-shape. Usually the lower fair value gaps of that should stay a breakaway gap due to the fact that we are getting speed. If you want speed for a range, and we have a draw on liquidity, we have an old high which we're targeting, sell side has been purged, you don't want to see a lot of time spent in inefficiencies, and they will usually be created when we're trading down into a lower time frame fair value gap. So for example here, right, where this 1 minute breakaway gap is being created, if you study on a lower time frame, then that 1 minute, obviously, sorry, I need to put that on all lower time frames. If you study on lower time frames than what it is, they will always occur where we trade into a fair value gap on a lower time frame. For example here, right, you can see how on this 5-second chart we trade into this fair value gap and trade away. At that point, that 1 minute fair value gap should continue to trade, should be continued to stay open because that's a protected low. ICT probably explains it better than me. But for example up here, let's mark out that 1 minute fair value gap, which I mentioned as a breakaway here. We study this. Right, you can see how that 1 minute breakaway gap is created in a lower time frame fair value gap. Right. I can explain it more after. So you see how we closed under all these up close candles. When bearish, every single up close candle will support price lower. Now I'd monitor this inefficiency, whether we're using it as a discount or a premium. So whether we're closing above 50% of it and then using it as characteristics to go higher, or we're trading into 50% and continue trading lower. Obviously we're down into a discount of this range from high to low. If we mark out high to low of this range, you can see we are in a discount now. So any longs would be favourable up here, obviously towards discount, and we trade into this 1 minute fair value gap. There. So now, again, up close candle for created. What do I want to see? I was close under that up close candle and then use that as a bearish order block to continue lower in a low resistance condition. Study the 5 minute chart, which let me keep this tidy. Notice on a 5 minute chart that breakaway gap on this 5 minute. Notice what we done. We opened that 5 minute candle here, created a wick higher, small little fair value gap, trading into the high or just shy of a high of this fair value gap. Then we traded lower. If we mark out that range of that fair value gap from high to low, let me do this. If we mark out the high to low of that range of that fair value gap, we haven't closed under it yet, and it's not technically a inversion as of yet. But if we mark out that range, notice the characteristics. Let's not put apes on it. Notice the characteristics of what we're doing within that range. Look on a 1 minute, or let's. Sorry, I'm just gonna go on a blank chart because it's easier for me to explain. So within that fair value gap, so I've already managed there now. Notice how we trade into it. If we're bullish, you're going to want to see reactions higher, right? You want to see speed away. What are we doing coming into that fair value gap? Instantly closing under 25%. We then create a swing low, fail to reach the high of that inversion, so that's showing weakness, and then we trade lower and close beneath midpoint, and then we close beneath the gap. So at that point, that should be using as inversion characteristics, right? So what is created in the lower half of that fair value gap? A 1 minute inefficiency, right? So then that is the premium array to continue lower if we're bearish in a low resistance run. So let's go on to our actual chart with all the annotations. Now notice the up close candle, which I mentioned. If bearish, what you want to see is us fail to get into the upper half of that fair value gap, close under an up close candle, and then continue trading towards our direction. Like, The difference between low resistance day and a high resistance day. So you said it there, a low resistance run. In terms of days are not high resistance, days are not low resistance, technically. Price delivery, price runs are high resistance and low resistance. For example, this run higher here is very low resistance. You see every single down close candle supporting price higher. You see every imbalance supporting price higher. Whereas a run like in here, for example, there's a lot more chop, there's a lot more wiki conditions, right? Like I do, one sec, let me try and get the video just with ICT saying it. I know some people don't like ICT, like watching his content that much, but you get so much value, and I'm not gonna preach forever, but I would suggest watching ICT's videos. What is it? This. One second. Oh yeah, I'll do it on a different screen, sorry. This was talking about the other day. Okay, look. I'm just going to play this for 1 second, okay? It just explains what I'm trying to explain in the best way possible. Okay, 1 second. So I'm going to stop there because we lost like 15 people while ICT's on. But in terms of low resistance price runs, every single, like, I will blow my account in high resistance runs. Like, as a new student, you should focus on when is high probability, when is low probability, what do high resistance liquidity runs look like, what do low resistance liquidity runs look like. Because even now, I will blow my accounts if I'm trying to trade in a high resistance liquidity condition. I will blow my accounts. No matter your model, you will blow your accounts. No matter if you're the best trader or not. Like, I can't, following my entry characteristics or criteria, I cannot be profitable in high resistance liquidity runs because price is staying around my entry a lot of times, and I can't do that on a 5-second chart, right? I have to wait for signatures in price to show that price is starting a low resistance liquidity run, like this breakaway gap up here. You can go back into a recording when that was printing. I mentioned that I would want to see that as a breakaway. I mentioned that I would want to see this new week opening gap used as a premium array. You want to see in here I was mentioning, I want to see up close candles printed while moving lower, and every single up close candle should support price lower from that point onwards. That's how the market moves. That's how real order flow works in terms of reading it from a chart, not using level 2 data. Right? Like, I don't, while we're waiting for this, because there's not going to be much here, I'm just looking for sell side, right? I'm just quickly going to, yeah, I am recording this. So, oh, wait, opposing candles. Sorry, this is going to be a lot of videos. Yeah, you can hear my audio. You can hear my audio, I just can't drag it across. For example, wait. Sorry. This is literally how I built my model. It's in every single mentorship, right? Get off Ice Tea in a sec. So, like, I've done my research on that. Like, I was looking up that word because I had no idea what it meant. Someone called me earlier. I had no idea what it meant. So, go back into the recording and study that price run, right? Again, let's look at that. Up close candles. I would have liked it to trade into that low there. I'm not a big fan of that, right? But just use that. So, yeah. So when bearish, up close candles want to support price lower. I kind of want this to hit, and then I will go into it more in depth if you want. So I would want. Okay, let's study this on a really low time frame for a sec. Now I would be monitoring how we are using down close candles on a 5-second chart within this price delivery. So any inefficiency, any inversion, for example, this fair value gap, I'd be monitoring that. On a lower time frame, I'd be monitoring this wick midpoint, how we're closing in that. If we return to a short-term premium, where is a premium? Where there's an inversion there, we're creating a swing low there. Now we've got up close candles. If we close beneath them, I want to see displacement through that range towards sell side. As if we close under him. So now we've opened beneath him. We didn't close under him, but this short-term low, monitoring that. We've closed under them up close candles now, so that should support price lower down into sell side if we're going to take it in this run. And there we go. Right, that's on a 5-second chart, and I know I don't keep want to going down onto these low time frames, but yeah, every single go watch the stream back in here, right? And obviously, again, I mentioned I would only paper trade today, but positioning in short in up close candles and then into discount targets, right? There's executions based on it. It's only a paper trade account. I don't know when even this is from. This is from last week. But every single up close candle supporting price lower. So, yeah. And then within all of these price runs, right, I want to keep it pretty clean. But like, for example, with all of these swing points from this high to this low, like I'm going to mark them yellow, but this is just for like pattern recognition, I guess, or just understanding price delivery, right? If you want to get in like line with this, I guess, and understand it, you'll probably have to watch it a couple of times. Let's just do these funds for a minute. Okay. All of these price runs. Now look at this on a low time frame. I would go lower, but for now we're not going to. Notice every single up close candle which gets traded beneath within what color stands out the best? Probably blue still. So no down up close candle gets closed through here. Here gets closed through. Trade up into expansion lower. Just create a swing low. Short-term reversal where to inefficiency, 50% of the new week opening gap. No up close candle, no up close candle, up close candle trade under. Up close candles traded under. You can see paired with a fair value gap, expansion lower, consolidation, new price run. Look at this range from high to low, return to premium. And if you really want to study, look at that inefficiency, but this is going beyond. This is going to like live on 1 second charts. In here, up close candle traded through, monitor that entire range, how we should consolidate in it. Up close candles, up close candles, up close candle within the wick as well. Support price lower in here. we obviously create that up close candle, we trade through it, but then we're also within this inefficiency. Is there a volume balance there? Yeah, there is. Trading into inefficiency. Up close candles, create that low consolidation. In here, look at every single opposing candle. I'm not going to keep drawing it out, but opposing candles. Here, 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 here. Trades just shy of that low, return into what? Inefficiency. Up close candles, support price lower until low. And then that's that price run. And then I showed it on this price run, right? On a 5-second chart just before reaching the target. And you're going to have to do a lot of studying into that. Like, I haven't just done that overnight, right? But study that delivery as a whole. And yeah. Like, that's why when I did my backtesting streams, like, we could do some backtesting. I'm going to do some backtesting at some point. But if we look at the backtesting streams, I don't know if it shows screenshots of trades. I think I would have had to save them. Back. That back button's not working. These are the 3 backtesting sessions I've done in here, right? We did 2 yesterday. Some people showed up. We did 2 prop firms. But these were all done mainly with inversions. Like, in here, when I'm in here, I'm trying to stick to teaching our inversions as much as possible, right? Because it's Dodgy's Discord, you've all came here for inversions. Personally, that's not my model, like I said at the start. But order flow is order flow, price delivery is price delivery, right? Yeah, I know. I'm like, what are them emojis? So, yeah. It's just order blocks, opposing candles. Like, all of these lines in here are potential entry models for me. How were you confident wasn't going to react from them 5-minute gaps? So, okay, we can go into quick. Let's go into it. So, let's go into everything about this trade, right? 1, I'm bearish on the daily chart, so I'm not bullish. We traded into a short-term premium, which is this breaker here, and this 15-minute and 5-minute fair value gap. So that's a short-term premium compared to where we were in price taking this sell side. Well, yeah, you can, I guess, I don't know. I'm not promoting, but so we traded into that inefficiency, right? At that time, I mentioned in here, as soon as we closed above this high, I was like, if we are bullish, the new week opening gap will support price higher. What did we do? Instantly close beneath it. Okay, there's a start. That's a potential start of a market maker model. Then I'm observing, what are we doing? In here, we're trading up into consequent encroachment, then displacing beneath these up close candles. At that point, we created a breakaway gap, which is one of the strongest PD arrays. It's not a PD array itself, but it's a classification of a fair value gap. Right? So we leave that open. Then we then displace beneath this low, right? At that time, any premium, like you'll see where I'm entering on lower time frames because there was reasoning. Go on a 15-second. In here, I'm going short within this consolidation. I don't know what it was based on. Yeah, when we were creating an up close candle, basically. Then I go short again, trading into this 30-second fair value gap, and then I go short one more time within them 1 minute up close candles at the low, once we're rejecting away from them. At that point, my stop is comfortably in that breakaway gap because that should stay open if we're bullish. And I might be wrong with that, right? But then I mentioned on that this for 5-minute chart, for example, let's do it on here because it's easier to explain. What you want to monitor is how we're trading into bearish inefficiencies. So for example here, or bullish inefficiency, sorry, these bullish fair value gaps. If we're bullish and you want them to be used as a BISI, a buy side imbalance, sell side inefficiency, in its normal characteristics of supporting price higher, it is being recorded. You would want to see discount sensitivity from the higher portion of them PD arrays. So you see these 5-minute inefficiencies. What you want to see is lower time frames supporting the idea. I'm going to turn this to a color that supports my eyes because it hurts my eyes. That's a bit nicer on my eyes. But you see how instantly we're closing under midpoint of it, trading to the low, consolidating at the low, right? At that point, what you would have wanted to see if we were bullish is something as an example like this, right? If there's a 5-minute fair value gap, you want to see us staying in the upper portion of that. You want to see us using the upper quadrant. You want to see expansion away from the high once we close back above it, and then displace, creating breakaway gaps, right? You want to see expansion. You don't want to see us close the gap in completely and then consolidate within it. The more times we're spending within an inefficiency, so a bullish fair value gap or a bearish fair value gap, the lower probability it is to deliver a low resistance run towards a desired direction or draw. For example, in here, that's showing weakness to me. So what do? Trade up to a short-term premium to efficiently balance this range. So you can see this inefficiency, the last inefficiency of the leg. We trade up into it. I don't really want to go onto a lower time frame, but I was seeing if I can kind of show what I'm meaning. So you see within, there's no price delivery through this range at that point. So you see, again, inefficiency in price. So that's a very, that price region is very inefficient in price delivery, right? So what are we doing? Trading up into that to deliver. That's all ICT has not coded, but like gave his PD arrays names and what his PD arrays are to find 1 second imbalances. He has one video explaining it on his YouTube channel. But we basically use it as a premium array here. We then close under that 5-minute fair value gap here. Use the lower, it's being recorded. The lower quadrant of that inefficiency, and then we trade lower. Then what do? Initially find support here, trade to the old low and deliver a balanced price range of this price run. So we've had buy side delivery, sell side delivery, buy side delivery back into it. So, or that can be the same as on this 15-minute chart, which we mentioned, right? Where we have sell side delivery, buy side delivery, sell side delivery through it. Then all of the range here is balanced. So that's why I draw out the old low and keep it on my chart. And then that is the breaker. Sorry. So then we return up to premium. We're not showing, if we were bullish here, we would be inversing these fair value gaps. We're not doing that. We're using them as premium arrays, not discount arrays. We're finding premium sensitivity on these PD arrays within this price leg. Consolidate towards 50%. Fail to get back above the inversion, the bullish fair value gap there on the 5-minute. And then we consolidate around equilibrium. Then what do? Close under the fair value gap. At that point, I do not want to see above 50% traded to. So again, you can mark out the old low, which will be sensitive. What is that old low paired with? An inefficiency, right? So that would support price lower if we're bearish. So yeah, that's the mitigation block. And then we trade lower, right, from that. So them bullish fair value gaps, the bullish fair value gaps here are already being used as inversion fair value gaps within this whole price run lower. There's no signs of them being used as bullish fair value gaps. Like look on a 1-minute chart, for example, instead of going onto these lower time frames to explain it. Notice how we're instantly closing under it on a 1 minute chart, right? Returning into a premium fair value gap, order block, trading lower. Then what do? Get within the range, the body's closed within the range of the 5 minute fair value gap. It fails to close back above it once we trade it to a consequent encroachment, which is showing weakness. We then close under the upper quadrant, then under the whole inefficiency. So at that point, that potentially becomes inversion characteristics. Then we trade up into the lower quadrant, failing to get to midpoint, leaving some of this as a breakaway gap. You'll see a fair value gap there on a lower time frame being left open within that range. Trades away from that fair value gap, and then the story is told there, right? But the inefficiency is to the right. Can you just kind of explain what you mean by that? Once the retracement low, that mitigates. Once the retracement low, that mitigates the retracement low. But mitigate allowing you to. If we touch again, are you considering a flip or reversal? Well, if we touch a premium array, which should be used as support lower, right? Then you should see expansion away from that in a low resistance condition. The only time we return to inefficiencies constantly is in the high resistance conditions, right? When price is being confined to either time, so time distortion, or we're just waiting for liquidity to build, right? That's the only time it's going to do it in high resistance conditions. In low resistance runs, we're going to see inefficiencies left open. We're going to see every up close candle support price lower. We're going to see every PD array work like it's meant to. But the reason your fair value gaps aren't working, your inversions aren't working, your order blocks aren't working, it's not because of the model itself. It's because of a price delivery you're trading in, the run you're trading in, whether it's high resistance or low resistance. That's when that's going to make the difference, right? Everyone can have a model, like everyone can copy Dodgy's model, but little to no people are going to be profitable with it by statistics, right? Because you need to figure yourself out. You need to have the discretionary view on price in terms of, does it look like it wants to expand? Is it in a low resistance run? Is it in a high resistance run? I'm just going to share 2 documents in here. They've been shared so many times within this Discord anyway. They're just identifying high and low resistance runs. They're just 2 documents I made. I feel like they're really good help from it. Bank holidays. What tell you not to trade that day? Well, it's conditions, whether it's a bank holiday, whether there's no news, whether higher time frame draws have been met. Like, if you... Just posting 2 things in chat. Sorry, I'm trying to find it. So blind. Find it. That document, isn't it? Them 2 PDFs there are good. You go bricks on high time frame on the post, which should get respected. Yes, for certain PDFs, when I'm looking at stuff, yes, I do. For example, that's why I've got this chart, which is very messy, and like I'm not. I would say not to like do something like this, but like For example, I would usually do something like this, right? I would have different colors for certain PD arrays. So this is just a messy chart with every PD array on. Let me word it differently. If price was moving a certain way, yes. For example, let me give you an example. For example, in here, I was in Coffee and Chill on Friday for a little bit. These were my targets. What highs was it? This high, right? Well, no, it was. Let me go on a 5 minute. It's easier to see what I was looking at. So it's these high here, because that is the last high. This high has been raided in there. So, for example, in there, once we took sell side, I took a trade short in here. When we took sell side, then I was looking for buy side. I took 1 micro long in here. Right, we trade to buy side. At this point here, and then we run straight back down into 50% of a range, right? 50% of range is in there, overlapping this inefficiency. Then I said, I'm not really interested in much now. Like, both sell side draw and buy side draw has been met, and now we're back inside the range. I'm not interested in it. And then look what the day does, right? So once certain levels are met, once certain draws are met, like, and we don't continue seeing expansion above this high, right? If we were bullish, what you would have wanted to see is us to close above this high and then keep running. Maybe create a down close candle here, trade above it, use that as support and continue higher. That's what a low resistance run would look like. But no, instead we just traded back down inside of a range. We're not seeing a follow through, we're not seeing an expansion. A good way to learn by watching ICT and taking notes of every single video of his. I'm doing it in order of his playlist on his channel. By the way, like a month ago, I just finished the same videos until 2023, but at that time I was watching on 1 time speed. I'm not looking to enter in a high resistance run. You should not. I'll answer your question in a sec. I'm not looking to trade in a high resistance run at all, because why would you want to? Like, I blame my accounts. Like, I can show executions like that. Where is it? Maybe I don't have it. Yeah, I don't have it. Yes, I don't. Oh, yeah, here. For example, here. This is an account I used to have. It's a bit different chart layouts, everything like that. That's a blown account. I was trading on minis, bearing in mind, right? Yeah, I'll get the recording. You'll have a recording. Look at when I was entering these trades. Look at the range, right? We are just being confined to a range. Whether I'm a buyer or seller, I'm going to get stopped out. Right? So avoiding these conditions as a whole is obviously a high probability. Let me go on to my actual chart. So you see how we return back into the 5 minute fair value gap as an inversion? Danny, I don't know how to say your name. The person saying about Dan, I'm just gonna say Dan. I can see Dan in there. That's a good way. Yeah, I would 100% suggest watching ICT. Like, that's how I learn. So I would suggest it. Like, he's the source of the information. Scroll up a little bit. You'll see 2 documents. That's how you spot low and resistance liquidity runs. They're called spot and low resistance conditions and overlapping candles. I'll just reply to the message. But how do you know if it's a low resistance liquidity run? So the whole concept is of inversions, right? Not inversions, overlapping candles. Sorry, I was just thinking about this 5-minute inversion. Hitting here. In terms of overlapping candles, for example, in here, you can see how every candle is overlapping each other's range. You can see how there's no fair value gaps being created. We're just gyrating. We're not displacing, we're just consolidating. At that point, you wait. You don't try and take a trade because you see momentum. You wait for either buy side to be taken, and then once buy side is taken, you observe if we go into a low resistance run, which is every up close candle supporting price lower, every fair value gap supporting price lower. You don't need to catch the top. But every single up close candle supports price lower. You can see the range there. Here, 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 here. We close over this up close candle. We didn't close under the low, but then we just continue trading lower, right? And then you can see in here, I mentioned in there that was a potential area I would look for a short into there. But you can see how we open up to a low resistance run where our candles aren't overlapping the same ranges. We're creating breakaway gaps. We're trading away from previous highs and lows quickly. Whereas something like this, let's go on to Friday, you can see how we're just taking old highs, returning back into a range. Taking old highs, returning back to a range. Trading into inefficiency, returning deep into a range. Taking lows, returning back into the range. Like, there's no follow through, right? I've been trading ICT for about 3 years, or learning, but I know I make everything really complicated compared to Dodgy, but it's just, I like to go in depth and understand why price is doing stuff. So you don't trade strictly IFUGs right now. I don't. I can still trade IFUGs and they're pretty profitable. I've shown that in backtesting, but it's like the draw and liquidity is the main thing. I don't think most people should focus on a model. People should focus on what conditions they're trading in, whether it's high or low resistance condition, then for buyers have inefficiency and liquidity, and then have one PD array which resonates with you the most. Mine was order blocks, so I trade off order blocks, for example, here, right? That's my model. How do you know which high and low is protected or unprotected? A protected high or low will form within a fair value gap while taking another high. So, for example, in here, if we're bullish, we're trading into this breaker block, we're trading into a 5-minute fair value gap, we're trading into a 15-minute fair value gap. If we are truly in a low resistance run, this high is going to be protected because it's traded into our premium targets and we've displaced away. So they're usually created within high time frame PDOAs. Yeah. But I'm like, the easiest way to see, like, if you're a complete beginner and you haven't learned anything, opposing candles is the easiest thing. And I'm calling it opposing candles, not order blocks, because order blocks kind of sound very technical. Opposing candles is just every opposing candle to the current price delivery, right? Every up close candle when price is moving lower, every down close candle when price is moving higher. This makes sense, but you have to have the right draw on liquidity, right? Yeah. So trading the right draw on liquidity is everything, right? Me and Dodgy trade the exact same price runs. We'll usually have near enough the same entry, but we're entering on different things because we have the same price, like, narrative of where price is going to go. Like, our draw is the exact same, but our entry mechanism, we just resonate with different things to get into it. And within a market maker model, every single entry model will work as long as you've got the right draw. And that's why I say for the first year, don't focus on execution, focus on draw. Where's the market going to go to? So for that particular, you would enter off a first order block. My YouTube videos won't really explain the model too much. to be honest. It will show some tape reading, but I might make a video on it soon. But for example here, within these up close candles I was going short because we already created order block based on this reversal, right? If I study this price run on this time frame, right, and I know most people are like, but yeah, but this is not a like, you shouldn't be looking at this much at once, but this is kind of what I'm looking at the whole time on one of my monitors, right? Study from this reversal, look at these up close on a 4 minute, look at them up close candles, we close under them. Do we have an inefficiency above? No. Are we likely to trade above into that? No, there's no inefficiency, right? 3 minute, you can see we close under the series, wick up into it, leaving a breakaway gap. You can see a 2 minute, wick up into it. There's a volume imbalance in there, leaving no inefficiency above, so it's not likely we trade high because it's balanced price delivery. On a 1 minute, we trading up into that range on these higher time frames, higher than the 1 minute anyway, into these the 1 minute fair value gaps, trade lower, breakaway gap, and then that's just me scaling. That would be me scaling down continuously. Why can't I get the screen down? How do you recognise your liquidity and market maker model? Well, the market is either going to liquidity and efficiency, right? It's either going from an old low to inefficiency, then back to an old low, or an old low to inefficiency, then reversing to liquidity. That's all it's doing, right? So once we trade into an inefficiency, this is narrative. Well, we take sell side in here, relative equal lows. We then trade to a short-term premium, and then trade to sell side. So that price run, this is your market maker buy model, this is your market maker sell model, right? And then you can see you have the two sides of the curve. So you have the buy side of the curve and the sell side of the curve. So with inefficiency to liquidity. And now if I bring my model up quickly. Seconds. We find that I need to make these better. I've just got them in a massive download folder. I never find any of them. For example here, right? Look at, one second, let me do this. Let's use a bearish example. Right? In here, look, take profit, which is an old low. So old low, that's your potential target. Premium PD array, what's that? Any inefficiency above market price when we have a draw in liquidity lower. So that's that 50-minute fair value gap. That's that mitigate or breaker block. That's that 5-minute fair value gap, right? Entry model, any opposing candles. Like, look where my entries were in combination with that, right? So we have, let's just do this. I don't know which it was. Yeah, it was that and then that, right? So that's your premium array, that's your discount array. And then do that with that model, right? We have premium array re-engaged. We got sell side beneath, up close candles there. It's just short on them up close candles, stop above them, entry, take profit. That's literally what that is. Like, basically to a T, right? After it's delivered to your draw, how do you know it's not going to go further draw? For example, how do you know it's not going to hit further draw? For in that example, you just showed how to do it. It's not going to hit CE first. So That's when you're looking, for example, when I drew out these 5-minute fair value gaps a minute ago and looked at lower time frames within that range, right? What you want to see is how we trade above that high on lower time frames. That's why I'm always going onto a really low time frame, right? And just see what we're doing. You can see we're trading above it, we're failing to displace. And then we're trading lower. We're failing to displace. That's the main part of it. Displacement is everything. When we create inefficiency, that is opportunity. Right? That's far. For example, beneath this low, we displaced through it with an inefficiency, return to a short-term premium, continue trading lower. Look at every of these lows, how we displace through it. Until that low, and then what do we do at this sell side? Consolidate, fail to displace through, return to a short-term premium. If we were still bearish completely, we would displace through this low. We didn't. We swept it, came back into a range. So that indicates either a reversal or high resistance conditions, and either of them I don't want to be a part of, right? So that's why I haven't annotated anything for the last like 31 minutes. One sec, let me see this. This is my second ever funded account. I've been sitting at 10k profit and about 10-second max payout. To go that, shall I continue? Well, that's very good. It's obviously very good. Yes, I've already taken one, but no issues. Yeah. Very good, keep up. Since you like to know what boost price, have you ever looked into? I haven't. I just stick to what ICT says, and he says don't bother. But ICT has admitted if he had level 2 data back in his day, he would be trading with it. Potentially. But I've never found something that resonates with me on it, so I'm comfortable where I am at. How many days back do you use new day opening gaps or new week opening gaps typically get used? Because I tend to notice price values. Recent ones in the region usually goes best for seeing. Personally, I used to keep them on for 60 days, so that means that means 16 new week opening gaps and 60 new day opening gaps. But personally, just keep the last 5 on your chart. So the last 5 new week opening gaps and the last 5 new day opening gaps. So again, just this is what like in runs which have a little to no opposing candles like this, study that price delivery on a lower time frame. I know we didn't take out an old low, but it's just studying price runs, right? Let's go on a 15-second first, right? Between that low and that high, look at every single down close candle. Right? Supports price higher to our target. Go on to a lower time frame. Notice every single down close candle supporting price higher. I don't know if this doesn't. I'll check now. But notice every single 5-second fair value gap support or opposing candle. I'm going to mark out. Actually, I'm not going to mark out that at all. Supporting price lower or higher once we close above it. So there, 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 and this is the price delivery continuum, right? There, until we trade to buy side, and then what do? Go into a stage of accumulation, right? It's just price runs. Like you just need to study when low and high resistance price delivery is. Yeah, we had SMT, so that was a potential nice run. Well, you are very well versed. I see. Could you give me a plan on how you learned? Hey, do not do it. How long it would take to learn? No. So So I would start with core content. I've posted this loads, but I would start with core content. Month 1 to 4. Because that gives if you're very new to ICT, that gives a foundation of basically all of it. Then I would go to maybe the Market Maker series. I don't know what it's called. I'll get to 2022 in a second. What is that? I think it's Market Maker Primer. That's pretty good. Yeah, so Market Maker Primer. And I know it says Forex at the start, but just 50% of this range. Because we're trading into a 50-minute up close candle and bearish fair value gap. So anywhere in here, I'd partial in, and I would close a position if we close beneath an up close candle on a 1 minute. I think very soon we may see some sort of world event, but that will cause us to get outside of that range. Then go to 2022, then 2023, then 2024, then 2025, and 2026 after that, right? Like, I've watched every single video in them. So, like, that's what I would recommend, obviously. That's when you're seeing him price action. Well, we can go on to his channel quickly. So let me turn on, for example. Yeah, so I would keep trading that under 1 minute candles. I don't know why it's saying not available. But like, if we like look at his live streams, like there's not a like these ones I would have watched, but yeah, I just to show you. Like, we can go back for all time, like. And then I've watched all his videos, obviously, as well. Like, the only ones I haven't watched all is his charter membership. And then if we're going to go deep into it, we got a whole hard drive for this stuff. With all his private mentorship commentaries. But yes. Stay US. It will most likely be US to a certain extent at the moment, but they're going to have to create some sort of false flag operation in terms of what's going on in the US with a specific island. But I don't trust, like, I don't even trust conspiracy theories sometimes. So, like, they're playing such a deep game. It's ridiculous. Governments. Watched. I was watching. Okay, let's go back to charts. So, for example, down close candle, support price higher. You would want continuing. Can you tell us a simple way to identify high resistance conditions? Where we would prefer, would it be within a range of control? Okay, the easiest way to look at this is stay on a 5 minute chart. If the 5 minute chart is looking like this, if it's showing signs of no imbalance and overlapping candles, that's the best sign that we are likely in high resistance conditions, and you will blow your account. As soon as I start seeing this, where price is back and forth, where candles are overlapping, once we take an old low, we return back into the range with no inefficiencies, that's going to be the first telltale sign of a high resistance run. Whereas when we go into a low resistance price delivery, you can see expansion under every single low. So, for example, let's just do a low resistance run, for example. Like, a low resistance run will look something like this, where we have wicks doing the damage higher, while every single up close candle is supporting price lower. Right, and then on like a 1 minute chart, your 1 minute PD arrays will work perfectly within that. Okay, well, that's not. 1 second, sorry. How have I lost that? Okay. For example, within that price range, right, all your 1 minute PD arrays are going to work perfectly, right? Every order will support price lower, fair value gaps will get left open, lower time, like 1 minute fair value gap there will get respected, and then we'll continue trading to our draw on liquidity. But when price goes into a period of consolidation after taking a liquidity or taking a draw, like I'll just show another example. For example, here we've had this where you can see low resistance runs both ways here. Then we return to a state of overlapping. We go to a state of, I guess, lower time frame seek and destroy, but it's a high resistance condition where no inefficiencies are getting respected nor used as a discount or premium to continue expanding. But you'll see it within time. Like, what I suggest to everyone is going after your day, after the day has been done, for example in here, just study, mark out on your chart price runs on from a higher time frame perspective, which would have been good to trade on a lower time frame, which is clean delivery, right? Let me do it blue. And when times would be like this run here would have been a nice delivery to catch on a lower time frame. I know this is all hindsight, but in here, for example, that would not be good to be trading on a lower time frame. You're going to get chopped up. This price run, if you are able to catch that, that would have been a nice price run. And you'll see over time how candles overlap each other and when price will expand outside of a range. There's so much to catch up on, but how long did it take though? It took me about a year and a half of watching ICT concepts. For my first year, I didn't trade on any funded accounts. I just studied ICT, and that was for probably like 12 hours a day. Yeah. I would watch one. Why was Tuesday and Wednesday best? 1 sec. Still got a nice price run, yeah. So you see here what I mentioned. If you're in a long here, right, any close above a down close candle, that's a stop out for me. So for example there, from the total, like if I was entering down here, I'm saving 27 points there from high resistance conditions. As soon as we trade to this low or through this up close, down close candle, it either reverts to a reversal or high resistance condition, and neither I would want to be a long in. Be in a long. Why is Tuesday and who said it's bearish? Yeah, I'm bearish overall. The daily is bearish. I don't know what I'm gonna eat. The daily is bearish, like I mentioned. These lows are me next. Yeah, I have a model already. Okay, you don't need to learn more. I promise you don't need to learn more. You'll ruin, like, I've had quite a bit of hardships knowing everything in terms of knowing all of ICT's concepts, because when I started, I would be on a 15-second, I would see these price runs, but I would blow my account in high resistance conditions, overlapping candles. Like, I had two 5k live accounts, pounds, so it's about 15k USD. they both got blown within a space of 4. I'll answer. I'll answer in a second. Sorry. In the space of 4 days, I blew both accounts in total. Like, it took 4 trading days to blow both accounts. When, like, even though I was up profit on the accounts, but it took 4 days of losing days to blow both accounts. So I went 7 days winning in a row, winning streak, and grew the account a bit. Then I tried to push it in conditions which were not offering what I wanted to see in price. I sure took 1 loss and walked away, but continued trading. And seeing a live account P&L cross £5,000 on a £5,000 account in a day is worrying. And from then, stuff changed. Kill zones are just in volatility injection, so yes. Like, there's times of days which why was okay, Tuesday, Wednesday, if you look at the daily chart, right, what have we done? We've created this daily inefficiency now. We have daily relative equal lows below. Daily chart has swept buy side and has made this area jagged. Yeah, it's likely to be lower resistance in kill zones. So it's made this area jagged. We then returned down to this low, leaving it by 89 points. Then returned back into premium of this entire dealing range here, into this volume balance, and then displaced lower. At that point, we created a daily fair value gap. We've got the 12-hour fair value gap here now. We closed under this 12-hour fair value gap, so you would want that to be used as an inversion. And then we have relative equal lows here. So that's why I'm bearish. No matter what day it is, if them lows are not taken and we aren't closing above this high, if we close above this high, my bias is wrong. But as long as we're remaining in this 12-hour inefficiency, but daily inefficiency, my bias is these lows. I was trying to find my main notepad, which I did notes in, but I can't find it anymore. Every time frame matters. Like, look, I'm looking at this constantly intraday. And you're seeing order flow. Like, intraday, I'm looking at this constantly, basically, but I refer back to these like once an hour or so. Yeah, so for example, work your way from this chart over to here to do your analysis. Whoa. Then here. So work yourself across to do high time frame analysis down to lower time frame analysis. And obviously you're not going to do analysis before the session on 5 seconds. So see this 2 minute, 3 minute, 4 minute up close candle which we're creating. See what we do with that. I'll try and I don't think I have a lot of the notes that I did back then, because my main notepad I'm trying to find. I have seen it around, I just can't find it anywhere in my house. But I did some of it on Notion back in my day, and Obsidian is a pretty good note-taking app. I might head off in a minute because price has done pretty well. If anyone wants this recording, I can send it to you. Just DM me. Like, maybe just send me a message now. I'll DM you with the link. It'll probably be over Google Drive. Or I might make an unlisted video on my YouTube, or 50% of some high time win last week. No problem. Yeah, just I'll send it to you after. But yeah, I hope it was insightful as a whole. I know I didn't technically call out them longs, but we had this higher run here, which was nice, and then we have this lower run, which obviously I capitalised on. So, I don't do these often at all. I'm normally in Coffee and Chill, which has now disappeared. It is in the channel beneath us, but like I'm normally in this channel, which is called Coffee and Chill, but it's currently restricted. Everyone. Dodgy will normally be in the AM session for premium members, but I'll be around when I'm around. Are you giving other sessions? What do you mean? Are you giving other sessions? I'm going to stop the recording now because I'm not saying anything. So, just DM me.